By now, I think it's safe to say that we all know that buying and owning a home here in North Texas isn't easy, and it sure ain't cheap either. Higher home prices have meant bigger down payments and that heftier monthly mortgage payment too. And then we have to talk about adding in property insurance and property taxes. It is a lot to be sure, and that's why today we are taking Right on the Money off of the green screen, sort of, and sharing some ways for you to hopefully keep more of your green in your home and in your pocket. We're calling this Right on the Money, the homeschooling edition. Hey everybody, I'm Jason Wheeler. We're going to do something special here. We're spending most of this hour talking about home ownership. This is a hot topic, and I know that because I get questions about it all of the time. Will I ever be able to afford a home again? Is this market ever going to cool down again? What are interest rates going to do next? There is a lot to know and understand, and I know that because earlier this year I studied and became a licensed Texas real estate agent myself, and since then I've been sharing a lot of what I learned with you, and we're going to do that again in this hour, including a couple of interviews about what is expected in this market in 2024. Before we get started though, a fair warning. You're about to see a lot of me. During this hour, we're going to go over these 5 things. Let's start off with lesson number 1, a story that I filed back in March during Texas' severe weather season, but it's a lesson that Texans need year-round. I want you to appreciate your real estate professionals because they have to know a lot before they're allowed to help you buy, sell, rent, or lease property. I know that now because you are looking at one of the newest real estate agents here in Texas. Because I do so many housing stories, I decided to hit the really large stack of books and go through the licensing process myself. And I passed. As I was getting that education, I kept thinking homeowners and sellers and buyers and renters need some of this knowledge too. So I marked a lot of right on the money reminders in the margins, and I'm now doing a whole series of reports that we're going to call homeschooling. We start with homeowners insurance claims, especially timely because Texas and spring. Now, sometimes, as we've seen recently, it is a no-brainer. Absolutely, you're going to be claiming that one there. But if you have minor or moderate storm damage, you might wonder, if I make a claim, will my insurance get more expensive? No. If you have a loss due to natural causes, including weather, your insurer is prohibited from charging you more after you make that claim. Those don't work against you that way. What if it's not a natural hazard though, like you drive through the garage door, or you start a kitchen fire, or thieves break in and take some stuff? Those can affect your future premiums, but not the first time the insurance company has to pay for a loss like that. Now, if you have 2 or more of those types of claims in a 3-year period, they can jack up your insurance costs. If you have damage, modern real estate practice says you should contact your insurance company, but instead of saying, I need to file a claim, you say, I want to make an inquiry. You're telling them that you simply want to discuss the terms of your coverage for a specific loss. Ask them, if I file a claim for this, how could it affect the future insurability of my property and my premium when I renew? Also ask how a potential claim might impact your CLUE report. That is the Comprehensive Loss Underwriting Exchange. It allows all the insurance companies to see all of your property insurance claims for the past 3 years. Again, if you just make an inquiry about the damage, it doesn't go on your CLUE report, but a claim does. So discuss it and just know that the guidance says it may sometimes be cheaper for you to just pay out of pocket for repairs, especially if they cost less than or close to the amount of your deductible, particularly if you're getting a no-claim discount. If you have to make a claim though, you should know that your insurance consumer bill of rights exists. That requires the insurer to do certain things within certain time frames when you make a claim. Also, a consumer advocacy group called United Policyholders has a whole slew of sample letters for all kinds of issues you may need to address with your insurer. And they recommend that if you have a claim, start a daily claim journal where you write down all the details of conversations, issues, problems, and agreements payments with the insurance adjuster and contractors and anyone else you have to deal with. They give you my favorite advice too. Do everything you can in writing, but if you have to be in person with someone or on a phone conversation, they say immediately afterward, send a letter or an email summarizing what was said or agreed to and document on there that you are cooperating fully with the insurer, because that will prevent them from blaming you for delays and confirm that you're holding up your end of the bargain. Get those receipts, as they say. All right, you know how we do things with Right on the Money. We're not just recapping some of the lessons we learned in 2023. We are also looking ahead to the year in front of us. The National Association of Realtors just put out its top 10 real estate markets in the country to watch in 2024. And guess what? 3 Texas cities made that top 10 list. Houston, number 6, DFW, number 2, and Austin, number 1. Experts expect the housing market to really ramp up to match that red-hot job market we've been experiencing in Texas. And they have some happier predictions for mortgage rates and rents in the year ahead.
You all are looking out into 2024. I know it's hard to have the crystal ball and predict exactly what's going to happen, but you all are predicting much better things ahead.
The average mortgage rates on a 30-year fixed rate, I think will average around 6.3%. It is almost there already, and it will clearly be better than what happened in 2023, so that is an improvement. And the home sales overall to rise about 15% next year. When the interest rate is declined by 1 percentage point, say from 8% to 7%, one looks at the financial situation for households across the country, and essentially 3 million additional Americans would be able to qualify for a mortgage. Now, not everyone will respond to those changes, but even say 10%, that's additional 300,000 people coming to the market.
Yeah, and you all are expecting new home buying to really explode next year. I mean, it's been healthy this year, but you're really expecting it to take off.
The new home construction on a single family in the latest available data were up 44% from 12 months ago. So that is a large increase in housing start, which eventually translate into single family completion 6 months down the road, 9 months down the road. So more supply coming onto the market.
For people who are planning to rent in 2024, might they finally start to see some relief after we've seen some real run-ups in rent over the past couple of years?
The rent growth is essentially halting. It does not mean the rents are falling. It means that it rose, but no longer rising anymore. But in some locality like Austin, Texas, we have seen rents actually decline. And that's not due to lack of rental demand. It's just that there's so much apartment construction happening in places like Austin or even Dallas. So more supply is leading to rents beginning to stabilize.
All right, so we'll keep on watching and see what happens as we head into a new year. Lawrence Yoon, the chief economist with the National Association of Realtors. Thanks again for the expertise.
Thank you.
Still ahead, we've got some more money lessons for homeowners, including something that's going to come up really, really soon once again, and that is protesting property appraisals. We're going to do a step-by-step on how to protest peacefully. Also, some help for first-time home buyers. There are programs that can help you with down payments and with closing costs. I'm going to walk you through all of that a little bit later on in the show. Welcome back to our Right on the Money special, the homeschooling edition, where we're sharing valuable info for prospective and current homeowners. Let's get to lesson number 2. This one is a biggie. If you own a home, make sure that you have your homestead on your property. You can check whether you already do by finding your address on your Central Appraisal District's website and looking under exemptions. You'll also be able to see it on your property tax statement that you recently got. If you don't have a homestead, you want to apply for that. Homesteads prevent most creditors from seizing and selling your home to pay your debts. It also brings an exemption that gives you big financial breaks every year on your property taxes. Currently, at least $100,000 is exempted from your home's value for school taxes, for example. Let's say your home was appraised at $400,000. That exemption would be applied and your school property taxes would be calculated as though your home was valued at $300,000. Really lowers your tax bill there. Now, your county, city, and other tax authorities can also offer exemptions under a homestead when they calculate the tax that you owe them. Now, a heads up here, in most cases, property taxes are due by the end of January. After that, they can start adding penalties and interest, so you really don't want to run into that. Make sure that you've paid it and gotten that in on time. Now, if you disagreed with the appraised value on your home that was used to calculate your taxes, you probably spent some time protesting earlier this year, and you may be protesting once again just several months from now. So let's get to lesson number 3. How to protest without problems. Time now for my latest installment of Homeschooling, where I'm sharing important knowledge I picked up while getting my real estate license. Today I'm talking about protesting, peacefully protesting. Don't go in hot if you are contesting your property appraisal. Deep breath here. Collect your composure and your relevant facts. Know your appraisal district's deadline, first of all. You usually have 30 days to protest. Notify them in writing. Some of them allow you to mail it in or do it online. Some will accept just a short letter that you want to protest, or you have to file the official form, which I am linking to today, by the way. Now, your property appraisal is based on comps performed by comps. Yeah, your home was compared to home sales near you. That was performed by computers. You need to know what they looked at. So if you protest, ask the appraisal district for any information that they would use at your hearing. They are required to give that to you. Check out the properties that they compared yours to. Are there obvious differences in size or quality or location compared to your home? Document that stuff. Also, let them know of any value-reducing problems with your home that may not be apparent on paper or just from looking at it from the outside. And get your own set of comps, those comparable properties near you that sold on any day last year. Ask a real estate agent to help you with that. Now, remember, in a lot of areas last year, prices shot up in the spring. They peaked around summertime, and then prices fell, but so did the number of home sales. 2022 was an unusual year, so there may be some challenges, but also potentially a lot of opportunity for you to find comps that are more favorable to you. Mail in or upload this stuff to your appraisal district. They might just adjust your appraisal after an informal phone or video chat with you. Or you may have to go to the formal hearing. You can do that yourself, hire a professional, or use one of those services where they do it for you with no upfront charge and then just take a percentage of any savings that they get for you. Just check it out first. Now, if your home value is $1 million or less and you have your own recent appraisal from a certified appraiser, the Appraisal Review Board must accept that value, or they have to prove that that value isn't right. If you're unhappy with the board's final decision, you can appeal, usually in district court or binding arbitration. Okay, I went through this earlier this year and a lot of you did as well. Had to get a roofer. Finding a roofer here in Texas, especially after severe weather, is really easy to do. Finding a reliable one, though, takes some more work. Still ahead, how to shop for a roofer when the state of Texas doesn't even regulate them. It is finally starting to look like fall now that we're in winter, but here in Texas we know that we can always have severe weather, including this time of year. So we should all be paying attention to this next story from back in July. It is an important discussion about roofers. The weeks-long hail train that just kept on rolling through North Texas left a lot of roofs in tatters, and I have heard from some people who are still waiting to have theirs repaired, replaced, or even assessed. Now, I went up myself to take a brief look at my own shingles recently, and I melted. That's me dripping off the roof there. To put it mildly, the broiler that we're living in now makes a roofer's job unbelievably hard, but you know what other job is hard? Choosing who should get up there there to do the work, because while Texas regulates everything from electricians to associate auctioneers to combative sports judges, really, the state does not oversee roofers. A Texas roofing trade group puts it like this: anyone can call themselves a roofer in Texas, and they are not required to be knowledgeable, insured, or licensed, or even registered with the state. And that is why, hold on, after the icy stones fall in your neighborhood, give me a second, you may get a lot of laborers, passing through North Texas, going door to door, asking if they can take care of your roof. Now, use much caution when choosing who will redo the covering over your head, but how if they're not regulated? Well, there are sites that vet home service professionals. Word of mouth from friends and neighbors can be helpful too. Also, always check whether the roofer has a profile with the Better Business Bureau and what kind of grade they have there. But in the absence of state oversight, you may also want to check with the Roofing Contractors Association of Texas. That's the trade industry group I was talking about a moment ago. They actually developed their own roofer licensing program, and they have a searchable directory of their roofing members. There is also a North Texas Roofing Association that has great consumer resources, like the 17 questions you should ask a prospective roofer. Stuff like what kind of and how much insurance coverage they have, since they're going to be up there on your roof, and what is their warranty for labor, and do they have credit or consumer references for you, and are they going to get the required permits? I could go on and on with this, but that usually makes my producer go through the roof, and we've had enough damage there. Coming up here, we're going to switch gears just a bit. After the break, we are revisiting a North Texas business that has been turning trash into treasure. Have you ever wondered what happens to street sweeper brushes when they get worn out? Yeah, I never thought about that either. Well, apparently, they make for pretty good back scratchers for livestock and zoo animals in particular. Since climate change is one of the biggest issues of our time, I'm doing a series this year called Greener on the Money, looking at how environmental solutions can also be good for business. And I start with a store in North Texas that has sold a lot of those discarded street sweeper brushes. Another thing they sell a lot of,
so this is old bowling alley wood,
can be turned into new tables or butcher blocks or a shuffleboard. This store specializes in materials that are used but still have a lot of use left, often for ways that were never intended.
You know, I honestly think this would be kind of cool in a man cave.
Take, for instance, worn conveyor belts, huge rolls of them. That's me there. The industries that used them now consider them trash. And somebody else comes along and says, this is the treasure that I've been looking for.
Oh yeah, absolutely. People reuse it as conveyor for small projects they're using.
Or to walk on in gardens, or to skirt their RVs. Also popular in Texas as windbreakers for cows.
It is, keeping them warm.
Used conveyors also have helped to corral cattle, or you could use old guardrail for that too. That is, if you have enough left over after constructing your rest stop shelter. Yep, painted used guardrail. I was amazed when I see some of the uses that people come up with for this stuff. It's very creative.
Yeah.
Are you still amazed when you see some of the things that people do with this stuff?
Oh, absolutely, absolutely.
That's Ryan Groth, the Director of Operations at Repurposed Materials, Inc. The photos I've been showing you came from them and their newsletter and their Instagram page. Their DFW location is one of 6 across the country, and it's their 3rd busiest. They get all of these items from companies and schools and governments, and then they sell them, usually for about half of what they would cost new. Buyers are companies, farmers, ranchers, governments, and just people. So just anybody can walk in here and sort of browse it? And
yeah, open to the public.
Because you never know when you might need some used college football turf.
Some of these orange ones, you know, that's going to most likely be the end zone.
That could be patio flooring with a backstory. There were touchdowns on this.
Exactly.
Maybe also grab some old gym flooring and convert it into tables and walls. And how about transforming whiskey and wine barrels? Still have the wine stains on them.
Oh yeah.
Into planters, tables, dog beds, dog houses, sinks, and storage cabinets. Perhaps the only item they sell well, that's more versatile than that is, of course, the used fire hose, which can become chairs, more chairs, a handrail, a chainsaw cover, guitar straps, and an animal playground, among other things. It's really fun to look at a retired boat turned into a raised garden and discarded billboard vinyls being used for a teepee or to cover hay bales. But seriously, this all started with a guy who worked in solid waste and saw way too much stuff being thrown out when it still had useful life.
Keep in mind, all this stuff was destined for the landfill.
Repurposed Materials estimates that just last year, they kept 16 million pounds of stuff out of landfills, and they supported jobs and made money doing it.
A lot more to get to in this Right on the Money special. Down payments, mortgages, first-time home buyers. We still have some lessons and some tips and secrets to get to as Right on the Money, the homeschooling edition, continues. I'm Jason Wheeler. Welcome back to Right on the Money, the homeschooling edition, where I've been sharing knowledge that I picked up while I was getting my license to be a Texas real estate agent. Throughout this hour, I'm sharing 5 lessons with you, and we are now at lesson number 4. This pertains to one of the biggest requirements and one of the biggest struggles for a lot of people buying a home.
Okay, it's time for item number 4 on my list of things that I decided we need to talk about more as I was studying for my Texas real estate license. So let's discuss the up payment. Okay, I did actually pass my real estate courses, so I know it's really the down payment, but down payments are up. If you put the traditional 20% down on a median-priced Texas home back in April of 2020, you had to come up with $49,980. Now, for the median home in April of 2023, though, that 20% down payment had swollen to $67,628 and 40 cents up front. Now, for many home buyers, that is pretty much impossible, PMI. So what do? They get PMI, private mortgage insurance. Texas has led the country year after year after year and so on for the number of homeowners who have to pay PMI because they couldn't afford that 20% down payment. Now, PMI is an extra charge that your lender tacks on to your monthly house payment. It usually costs between $30 and $70 per month for each $100,000 you've borrowed. So if you borrowed $300,000, you'd pay between $90 and $210 extra each month for mortgage insurance. Now, that's a wide range there. If you have to go the PMI route, shop around. The fee can vary from one lender to another. Now, my real estate courses explained that loans where the borrower has made just a 3% down payment are foreclosed 4 times more often than a loan with a 10% down payment. That is why lenders want you to have this insurance, which protects them if you default. Now, since you weren't able to pay that 20% down payment in the very beginning, you generally are charged for PMI until whatever you put down plus all of your monthly principal payments adds up to that 20%. It can take years, but the run-up in home prices may actually help you to stop paying PMI earlier.
Now, what if you have the down payment, but you just haven't been able to find a home to buy? Many existing homeowners have been reluctant to put their houses on the market because that would mean they would have to go get another house somewhere and possibly finance that. And not that long ago, mortgage rates were up near 8%. But lately, they have been coming down. And don't sleep on that. Broker Joe Atkins of Joe Atkins Realty says if they come down just a little bit more, home sales are going to pick way up.
I think what you'll see is a number of home sellers who've been holding out because they do still have a low rate, meaning, call it 3-4%, going, okay, it's easier for me to digest, selling our house and our rate. It's not like you're just selling your house now, Jason. You're selling your house and your rate to enter, a rate that's higher, but it's just marginally higher versus significantly higher, when you're talking 8%.
Yeah, so the point that you're making there is that a lot of people who have an existing home may have one of these older mortgages that had these, comparatively great mortgage rates of, 3%,
right,
let's say. And they've been saying, no, don't put that for sale sign in my yard because I still have to go move somewhere else. And now I'm going to take out a mortgage loan that's way higher. So they're shorting that off. You've been hearing from some of these people. You think that 6% rate threshold might get a lot of them to start putting for sale signs in their yards. And we could see that in 2024.
I think that is the number, somewhere around 6% that just fuels a fire to the market. And I think we'll see a 10 to 15% of increase in sales. So I think you'll see a lot of those people jump in, and then, you might see a lot of that bidding war action again.
So I guess the mantra there is then that, you get in the door, a little bit earlier maybe than a lot of others, but, you always keep the idea of refinancing down the road in the back of your mind because rates look like they're on their way down.
What we're seeing right now is because of the higher rate, it has pushed out and sidelined a lot of buyers, but the savvy buyers are doing what you just said, and they're like, you know what, I'm going to get in now. I know I'm paying a higher rate. People forget the rents haven't really come down either. And so if you got someone that's been renting for say 3 or 4 years and, they're like, wait a second, I'm spending $3,500, $4,000 a month in rent to live in this, townhome, condo, apartment.
Are you seeing a lot of rents like that, Joe?
Oh yeah. And I think that's the segment of the market where there's more pent-up demand that we don't even think about are the renters.
This has been a pleasure and enlightening, for sure, as always. Thanks for doing this with us. Close out 23.
For sure.
If you think being a home buyer is hard, it's been rough to be a home seller too. As mortgage rates were rising earlier this year, some sellers became very competitive to try to get the attention of buyers, and it turns out free money tends to get their attention.
I have brought back Ann LaCosta along with her valuable shared Zoom screen. Ann is a big broker with Keller Williams, and she shared an email from a mortgage banker. It was about a seller offering an incentive to get their home sold. That's happening a lot now that the housing market has slowed down. In this case, it's
the seller that wants to offer $7,500 to a buyer.
Free money when I'm buying a home? Yeah, your first impulse is probably to choose door number 1.
So option 1 would be to take $7,500 off the price, and that would be a natural reaction. Let me just pay less for the house. Whoop. Okay. Well, that lowers your payment by $39 a month.
That's good if you plan to stay in the home 30 years without refinancing, because over the life of the loan, that lower monthly payment slowly saves you more than $14,000. But what if you don't plan to stay in the home a real long time, or if you think you might refinance in the future because rates are high now and you may get a lower one in a few years? How else might you spend that $7,500 that the seller is offering? Let's see what's behind door number 2.
Option 2 would do the 2-1 buy down.
Before you slam that door shut because it has intimidating financing words, this is just paying some of your mortgage interest up front. Each point you buy down on the loan lowers your mortgage rate by 0.25%. In this example, the loan was for $295,000 at a 7.25% mortgage rate. LaCosta says that if we used most of that $7,500 that the seller offered us, it is enough money to pay for a 2-1 buy down. So the discount would be for 2 years. It would drop our mortgage rate 2 points in the first year, 1 point in the second year. And then after that, we would pay our full mortgage rate. Here's the difference it would make.
That saves you $381 a month that first year. And then the second year, it's $195 a month.
Our total savings, almost $7,000. Yeah, that's less than in option 1, but we would save that in just the first 2 years. After that, we'd pay our full mortgage rate, or we could refinance it if rates are lower then. And
a lot of lenders right now are offering a free refinance package if you refinance within the first 2 or 3 years. And that is something buyers should be asking about, and they should be asking for those details in writing.
Always get it in writing.
All right, we've been talking a lot about home ownership, but we don't want to forget about renting. Every year, tens of thousands of new renters move to North Texas, and it seems like this year I heard from every one of them about how rents have just been going up and up. So let's navigate that.
You know, a lot of times, Right on the Money episodes start a lot like a therapy session, where I just sit here and listen, as someone else here on the complaint couch explains what all is going wrong, and there's a lot to get to. Anyway, this time it's about an apartment, and not with that view either. This one is way out in the suburbs. And let's make it smaller too. This place is a studio. The entire thing could fit just 41 of these small couches. It's 616 square feet. And yet, the lease renewal that just arrived would raise the rent from $1,315 a month to $1,479. That's a 12.5% increase. This after they got a hefty increase last year, and despite the fact that rents are nearly flat or are actually down month over month and year over year in many of the major markets and submarkets here in Texas. Now, the renter took this all to the leasing agent, who was also surprised by the size of the increase, and they chalked it up to the automated program that helps to determine rent offers. The algorithm did it, in other words. That's not unusual. Some U.S. senators have just asked the Justice Department this year to investigate computerized rent recommenders, alleging that they fix rents and create a cartel of landlords. The companies behind some of these rent-setting programs claim there's nothing illegal at all about them, but the algorithms are the subject of multiple class action antitrust lawsuits from tenants right now. Now, that's all going to take a while to sort out. The renter who contacted me needs to figure out what to do now. It was productive for them to talk to an actual person, the leasing agent. Equally important, stay calm and nice when you have that talk. This tenant also wisely passed along that they had talked to others in the building whose rents recently went up by much less. Also, they revealed that they had searched availabilities at that property and found an identical unit just down the hallway from them, listed for just $5 more than what they've been paying. After the talk, the renter tells me they are starting to make some headway. If you have to do this, just know that estimates show that for each tenant that's turned over, a property loses between $1,000 and $5,000 on average. So it benefits them to keep you. It also benefits you to know how to negotiate.
I hate to tell you this, but you may have hail damage and not even know it. I did earlier this year. Before you plug your ears and say, I don't want to hear this because it might be too late to get it fixed, even though it's been months since we've had a hailstorm, your insurance company may still be willing to pay up if you have damage. I'm going to explain that coming up. And as we head to break, we're taking a look back at one of the most watched and one of the most craved Right on the Money episodes of 2023.
Hard to believe that something that weighs so little is becoming a heavier and heavier burden. The Fed shows that our total credit card debt is the highest it's been since they started keeping track. We're at almost $1 trillion owed. The average card balance per borrower is $5,474. Now, younger Jason had a balance that was way bigger than that. Still bigger than that. And I remember he struggled mightily to get that thing under control. I know this process is not pleasant, so let's have some pie. Sorry, it's actually just a pie chart, because it's important when you're struggling with credit cards to be mindful of your credit score, which is weighted on these considerations. The biggest factor, payment history. Late or missed payments hurt, and even if you close a card where you have bad history, it can still stick to your credit report for years. Really try to avoid that. Now, good news, the percentage of seriously delinquent credit card accounts is finally coming down from pandemic highs. Now, let's get another piece of pie. The amount you owe is also a huge consideration for your credit score, and within this is what's called your credit utilization ratio. That's how much of your potential credit you're actually using. A lower number is better. Now, let's say you have 3 cards with a combined limit of $9,000 and you have $4,500 in total debt on them. That's a 50% utilization ratio on your cards. Not good. So you think, I'm just going to pay off the little one there and close it. Well, the problem is that now you're left with 2 cards that have a total credit limit of of $6,000 and you owe $4,000 on them, and that gives you a 67% utilization ratio, which is even worse. All right, let's bring the pie back. Length of credit history is important to your credit score too. Here, a higher number is better. If your card that you get rid of is the one that you've had the longest, now the average age of your credit card payment data is going down. That's not good. So you think, okay, I won't get rid of that card, I'll just stop using it. Beware there too. After a certain amount of inactivity, a bank can close your card, which again can make the age of your credit data go down and the utilization rate of your credit cards go up. I have actually seen advice that says if the card isn't costing you anything, maybe just keep it open and periodically make a small purchase and then pay it off. I know what we should buy too, because I've created the craving for it now, and because it's just good to reward yourself a little for controlling your credit debt and getting right on the money. Have you climbed the ladder? Not the one at work, the one at home. I ask this because we talked recently about choosing a roofer to remedy hail damage, and I skipped the first rung on the ladder. You may not think you even need to choose a roofer because you don't know you have hail damage. Texas insurers say that they've counted more hail events than usual this year, and yet so far they say this has been a relatively light year for claims. Now, it could be that hail didn't fall as much in populated areas, or that hail wasn't big enough to do a lot of damage, or that many people didn't file claims because they didn't know they had damage. I say that because earlier this summer, after seeing a lot of those little granules that used to be on my shingles spread out all over my patio, I did climb the ladder. I looked for obvious hail damage up there, but I'm an amateur roof inspector, so what was I looking for exactly? I mean, there were no holes, no huge dents, and no obviously broken shingles, so back down the ladder. To be sure though, I had 3 roofers that I had vetted come over to take a free look, and it was unanimous. They said, yeah, I had obvious, widespread, definite hail damage. Their extensive use of adjectives was so humbling. They also noted dents on my gutters and on the outside air conditioning unit and divots on the fence where the hailstones had wiped away the stain. I missed a lot of things. At least I noticed those shingle granules on the ground in the beginning though. Anyway, I got the roof work all taken care of with insurance that covers the total replacement cost. I've told you about that. I always get that coverage, even if it is more expensive. A friend of mine who also just got a new roof was unpleasantly surprised recently to find out they had actual cash value coverage, which means the insurer pays for the damages after deducting for depreciation like age and wear and tear. My friend, in other words, paid for most of that roof out of pocket. Ouch. Now, whatever your insurance, most insurers have a cutoff for when you can file a claim. The Texas Department of Insurance says some policies have a 1-year deadline from the date the damage occurred. Know what your date is, because there were storms last year too that might still be covered. And check your policy to be certain what kind of coverage you have. And maybe, yes, have a professional check your roof for free, especially if, like me, you had considerable auto hail damage this year. Some more humbling for me there. Roofers told me if it dented the cars, there's a good chance it was hard on your shingles as well. Just don't wait until the water starts dripping from your stained ceiling more than a year after a hailstorm to finally have someone go up the ladder.
We have learned a lot in this special hour, and now we are at lesson number 5, and this one is for the first-time home buyers. I know that it has been hard for you, especially in this pricey market, but there is help for first-time home buyers, and it may not be that hard for you to qualify.
Okay, so we've talked before about my less than glorious days in track and field. The fact that there were absolutely no blue ribbons at all belies the reality that I was fast. That was just a very unusual time when the competitors were all somehow faster. Anyway, you may understand my frustrations if you are newly shopping for a home to buy. You've got to clear that higher than usual mortgage rate hurdle and the raised home price hurdle. That one's a biggie. Then you've got a high jump over credit score requirements. Oh, and let's not forget the pole vault to get way up there to an acceptable down payment. That really might make you run fast. But hold on here. When I was getting my real estate license, I flagged some things useful for all of us to know. So now, installment number 5 of my homeschooling series is about alternative programs to help you get the home. First up, My First Texas Home. An important note here, it is for first-time buyers, yes, and for anyone who hasn't owned a home in the last 3 years. It's just that putting all of that in would have made for a really bad program name. Anyway, there are income limits based on county and household size. In Dallas County, for example, you can't make more than that for a household of 1 or 2 people, and not more than that for a household of 3 or more. There are also county-based home price limits. Under this program, in Harris County, for example, you can generally buy a home for up to $481,176. You also must have a credit score of 620 or higher. You can have a higher debt-to-income ratio than some other loan programs will accept, too, and it offers below market mortgage rates. That's a really big deal with rising rates lately. The program also includes the possibility of assistance in getting extra money for your down payment and your closing costs. For that extra money, you basically take out a 0-interest second loan that you don't have to pay back until you're done with the first loan for the house itself. Now, another option is the Home Sweet Texas Home Loan Program. This also has income limits, and you must have at least a 620 credit score. This option offers down payment assistance that can be in the form of a grant that you don't have to repay, or a forgivable loan that you don't have to repay if you don't sell or refinance within 3 years. Now, again, I say there are income limits to qualify for all of these, but those limits are high enough that many people in Texas don't earn too much to qualify.
All right, that is it. You made it. I know that was a lot of me packed into 1 hour, but hopefully you got some valuable info in there that will help you out. As always, though, I have included a lot more information and all of the links that we've talked about today in my mega article that I've posted today at Jason Wheeler TV on Facebook, X, and Threads, where you always have a home to live right on the money. Much more ahead, by the way, in 2024. Until then, an early Happy New Year, everybody.